Okay, lads, we'll see how this goes. So, first one is, I said I'm under a bit of time pressure here. So the stock is 45,350, and it tells us that included in this figure are goods purchased on a sale or return basis. So we bought them on a sale or return basis. The goods have been recorded as a credit purchase with a recommended retail selling price of 36, which is cost plus 25%. So normally that one is sold on a sale or return basis. So we have to take them out of stock, take it out of purchases, and take it out of creditors. So the cost price is 3,600, which is cost plus 25%. So that's the selling price. So we take the cost price, which is 3,600. We're going to divide that by. Let me just write that down. We're going to divide that cost price by 125 and multiply by 100, and that'll give us 2,880. So that gets taken from stock. It gets taken from purchases. So purchases is 347,500, and it gets taken from creditors. I'm not actually sure if it should be taken from any of these on the prudency basis, but that's what it'll be in the marking scheme, so we'll just go with that. So creditors 47,650. We're going to take away that 2,880 as well. That's the first working done. Second one is your depreciation working. So we've got delivery vans. Delivery vans start off at 110. We're going to take away the old van, which would cost 26, and add on the new van, which cost 32. Which is 116. Okay, then the depreciation of it is 15%. So it's 15% of 110 for the first 5 months, for the first 6 months of the year. 30 to the 6, so 6 months and 6 months. Which is 8250, and then for the second half of the year, it's 15% of 116. Which is 87. So the two added together give you the depreciation charge for year 16,950. The accumulated depreciation is your starting figure, which is 110 minus 60,500. So that's what's that? 49.5. Add on the 16,950. And then take away the depreciation on the old van, which is 15% of the old van, which was 26,000, by the number of months you had it for. So you got it on the 31st of the 5th, 2015. So you had it for 7 months in 2015. You had it for all of 16 and 17 and 18, so that's 36. Plus 7 is 43, and then you had it for 6 months, so that's 49/12. It's 15,925. So your depreciation, your accumulated depreciation, then 16,950 minus 15,925. So that's 52.50. The profit or loss then if the new van minus the allowance, or sorry, its value is 26,000 minus 26,000 minus 15,925, which is 10,075, and you compare that to the allowance. You got an allowance of 10,000, which means you made a loss of 75. Okay. The check for the net amount is included in purchases. So the check for the net amount is, the new van's 32, the allowance is 10, so the check is 26,000. The new van is 32, the allowance is 10, the check is 22,000. So that needs to get taken out of purchases. Okay. Working 3 then, the suspense arises from posting of an incorrect figure for mortgage interest. So we'll go up and have a look in the question and see what it says about mortgage interest. So the mortgage interest is for 3 months, 3750. So the mortgage interest, right, this is a little bit tricky. So you've got an 8% mortgage, and you've got an increase of 40,000 on the 1st to the 10th. So it's 100. You have 8% of 180,000, and that is for the first 9 months of the year. And then for the last 3 months of the year, you have 8% of 220,000. Which is 15.2 in total. However, the mortgage interest for the first 3 months of the year is 3,750. So that 3,750 is wrong. It should be 3 months, which is in effect a third of this. So it's 10,800 by 3/9. Which is 3,600. So that mortgage interest 3,750 should have been 3,600. So this side is 150 too much. So to make it balance, we have to make it 150 less, whatever incorporates suspense. So I don't see where the suspense is. Oh no, here we go. The suspense is 400. Alright, that should have been something incorporating suspense. Anyway, we'll get that suspense to 0, which is where it should be. So that 400 is a credit of 400. So this side is less. And you don't really have to do this suspense part because this is going to go to 0 eventually. So 400, a credit of 150. We'll bring it up. And then that brings the suspense up to 550. So this is wrong somehow. Anyway, and a discount allowed entered only in the discount account. So the discount allowed should be entered in the. It is entered in discount, but it should be entered in debtors as well. So debtors should go down by 250. So we credit debtors by 250. Okay, which means we're going to. Alright, we've credited debtors. We're going to debit suspense by the same amount. Sorry, that should have been a minus there for the interest. Sorry, this had gone down by 150 to 36, so this has to go down by 150 to. So the suspense goes to 0, like it should do anyway. So I don't know why they incorporated in suspense like that, but it just means that goes to 0. That was sort of new. Working 4 there, patents which incorporate 3 months investment income received. So we'll work out our investment income. So 6% investments. You got them on the 6% investments. You got the investments on the 1st of the 7th, so 6% of 100,000 by 6/12 is 3,000. Okay, the investments incorporate 3 months investment income. So our investment income due is going to be 3,000 minus 3/12 or 3/6 of 3,000. Which is, it's 3/6 of this number here, which is 1,500. So your investment income due is 1,500. And then this 1,500 gets added to patents. So patents are 54.5. Add the 1,500, brings you up to 56,000. And they're going to be written off over 7 years. So 56,000 divided by 7 is 8,000. And that 8,000 gets taken away. So that gets you to $48,000. Okay, so that's your patents working done. Alright, a new warehouse was purchased for 56,750, including VAT of 13.5%. So we need to find, so it says the amount paid to the vendor was entered in the buildings account, no entry was made in the VAT account. So the full 56,750 was included on the debit side of buildings. It shouldn't be, alright? So we need to take it out, we'll take out the VAT. So just do a little working here. The VAT element, 56,750 is 113.5%. So we're going to divide that by 113.5 and multiply by 100. Sorry, multiply by 13.5. That'll give us the VAT. So 56,750 is divided by 113.5, because that's 100% being the buildings, 13.5 being the VAT, and then multiply by 13.5 just to find the VAT. So 6,750 is the VAT. So buildings need to go down by 6,750. So buildings are 420. It's always this figure here. So go down by 6,750. So we're crediting buildings by 6,750. And we're putting that 6,750 into the VAT account as a debit. So it's taken out of buildings as a credit and it's moved into VAT as a debit. So VAT at the moment is 4.5. Then we're going to debit another 6,750 onto the debit. So we're going to add that on. So VAT is a debit. That's why we added on. If that was a credit, we'd be debiting the credit, so you take it away. That's 11,250. So that's that one done. Nothing more than that. So the provision to be made for mortgage interest due, investment interest due. Well, we've done those. Just mortgage interest due. Sorry, I haven't done mortgage interest due. Mortgage interest due is whatever you've paid, taken away from the 15.2. So 15.2 minus 3.6. So we changed the. So it's 11.6. So that's that one. Investment income due we've definitely done already. Goods taken by Sugrue for his own use were omitted from the books. These had a retail value of 5.4, which is cost plus 20%. So we'll get the cost price there. That's 4.5, and that has to be. We don't. That doesn't go in the accounts or anything. But that 4.5 gets taken from purchases and added to drawings. So the 4.5 gets added into drawings. So 23,760. Okay, that's that done. No record would be made in the books for goods in transit. Again, we'll find the cost price. Goods in transit, goods we bought that haven't arrived yet. So again, the cost price is 7,000 divided by 1, it includes cost plus 25, so divided by 125 multiplied by 100, which is 5.6. That gets added to stock, purchases and creditors. You own the goods. Oh god. You own the goods, but they haven't arrived yet. So 5.6 to stock, to purchases, and to creditors. Last one then, or second last one. During the year, stock which cost 4.5 was destroyed by fire. So it's already destroyed. It's already taken out of closing stock as a result. But it has to get taken out of purchases. So we take it out of purchases. Okay, so your purchases, because it's no longer for resale, so it goes down by 4.5. You've received compensation of 4,000. Does it say you've received it? They've agreed to pay compensation, so you're going to get compensation. So that's compensation due of 4,000. So you got 4,000 for something that was worth 4,500. So you made a loss of 500 on the insurance claim. And the last one then, a supplier who owed 3,500. Again, straight away he doesn't owe that 3,500. So debtors is going to go down by 3,000. Debtors hasn't changed. Sorry, creditors, a supplier. So creditors are going to go down by 3,000. Sorry, why didn't? Oh, it did. So creditors is going to go down by 3,500. Office equipment is going to go down. He's accepting office equipment. So the cost price of which was 4,000. So office equipment goes down by 4,000. 15,000 minus 4,000. Its accumulated depreciation goes down by it had a book value of 3.2, it cost 4, so it means that at a book value it had a depreciation of 800. So the difference between those, the 15,000, 6,000, 9,000. So 9,000, and we're going to bring it down by, what did I say, 800 was it? Yeah, going down by 800. So the accumulated depreciation is 7.2. And finally, that means you made a profit on the sale of that, or you got a discount, whatever way you want to look at it, of €300. So 3.5 and 3.2 is a difference of €300. So you made a profit, or you accredited a discount of 300. So discount at the moment is 7.90 on the debit. If we're going to credit 300, we're taking it away because it's a credit. So debit and a credit, you're taking away for it. So instead of being an expense of 7.90, you have an expense of 4.90. Okay, so we had a net discount position where we had more discounts given of 7.90, but then we received another discount of 300, so it brings the net position down to 4.90. Then tells us provide for depreciation on office equipment at the rate of 20% of cost. So the depreciation of office equipment is depreciation of office equipment is 20% of the cost price. So the cost price is 11,000. So that's 2,200. And your accumulated depreciation, then you have to add on 2,200 to that, which brings you up to 9.4. I'm assuming I missed out depreciation on buildings somehow, a revaluation or something. Yeah, so I managed to skip number 6 there, so I'll just go back to that. Depreciation of buildings, it's 2%. So buildings at the moment is buildings at the moment is 413,250. So it's 2% of 413,250. Which is 8,265. And now instead of accumulated depreciation, you're going to have a revaluation reserve. So buildings started off at 420 down to 361,200. So what's that? 59.8. Add on the 8,265, and then add on what buildings have gone up to. So we're revaluing them up to 500,000. So they're going from 413,250 up to 500,000. So that's another 86,750. That's your revaluation reserve. Of 154,815. Okay, that's the notes done. I'm assuming I have them right, lads. We'll check in with you now in a second. I'm just going to save that.